question number 3, which is Sally Skateboards is a single product manufacturing company making skateboards. The following information relates to the production in 2016. We've got selling price, variable costs, so on and so forth. It asked me to calculate the break-even point in the number of skateboards and the sales dollars. Now, my break-even point, we need to calculate a couple of things first, but this is my variable manufacturing costs. So I've got some fixed manufacturing costs, I've got some variable marketing, I've got annual fixed, and I've got some sales volume, and obviously my selling price per unit as well. So to calculate my break-even, first thing I need to do is I need to calculate my contribution margin. My contribution margin equals my selling price minus my variable costs, which equals, now that's my, I've got variable costs here, here, so I've got 2 variable costs and I've got a selling price. So I've got 60 minus 25 minus 10 equals $25. So my contribution margin is 25. Now my break even equals my fixed cost divided by my contribution margin, which equals 500,000 plus 260,000 divided by 25, which equals, grab my trusty calculator, 500 plus 260 equals 760 divided by 25 equals 30,400 units. $30,400, and if that's in my, no, it's not dollars, that's units, I should say. Now my break-even units, break-even dollars equals my break-even units times my selling price, which equals 30,400 times my selling price, which was 60. So that equals times 60 equals $1,824,000. Alright, so that's A taken care of. Let's have a look at B, which says calculate the profit earned. Now the profit earned has to rely on my volume. Now profit earned, profit equals my contribution margin times my volume minus fixed cost. Now my fixed cost is this one and this one, which is 760,000. So my contribution margin was 25. We calculated that, 25 times 50,000 units minus $760,000. So my profit, here we go, 25 times 50 equals minus 760 equals $490,000. And that takes care of A and B. Now Sally Skateboards is considering a change in plant operations and production processes for 2017. The changes would result in a reduction in variable costs of $5 per unit and an increase in fixed manufacturing costs of $100,000. How many units would need to be sold to earn the same profit as 2016? So what we've got is we've got my variable costs. Now they're going to decrease by $5 a unit, so it's 35 minus 5 equals 30. So I'll have to calculate a new contribution margin, and my fixed costs are going to increase by 100,000. So that equals 860,000. All right. So my new contribution margin equals my selling price minus my variable cost. My selling price didn't change, it stayed at 60. And my variable cost changed to 30 equals 30. So my Now it said we want to earn the same profit as 2016. So profit target, my profit target equals my fixed costs plus my profit divided by my contribution margin. So my fixed costs are 860,000 plus my profit of 490 divided by my contribution margin of 30 equals. So I've got 490,000 already there plus 860 equals, and we're going to divide that by 30 equals 45,000 units. That takes care of C. Now it says, would you recommend the changes described in C above? You must explain your answer. Well, the first lot was 50,000 units for a profit of 490,000, and the second time it's 45,000 units for a profit of 490,000. So D, would I make the change? Yes, as we sell less units for the same profit. And that takes care of question number 3.